Good morning, ladies and gentlemen. Welcome back to another pre-market watch list here today. Yo. Good morning, everybody. So today, I forgot to mention one. Maybe today looks like it's going to be a pretty good day in the market. All right. You can see here by the headline, the title, we got a couple stocks here. May or may not be some more to add to that list, but for now, that's what looked good to me. So we're going to cover them. Might talk about a few others. Who knows? We'll see, right? Because things change from the time that I make my watch list in the morning to the time that we get on and end here. Sometimes some things change, but anywho, let's get to it. So first couple stocks, we have ZGNX. ZGNX is, I think it's a pharmaceutical company or a therapeutic company. Anywho, they have some positive phase 3 trials. So they have some really good news this morning. AVGO is Broadcom. AVGO is trending way down this morning, huge gap down. They're into an agreement for a buyout of CA, which is California Technologies, I think, CA Technologies. So anywho, got a couple good stocks to watch today. All right, so we're going to get to sharing the screen. All right, so let's do that. All right, here we are. All right, guys, so let's do this. Let me close this out. All right, so we'll talk about AVGO first. All right. All right, so here is AVGO, guys. So yesterday at its close, it was at $243. It is now at $218. So this is a little bit of a higher price stock, but it's definitely going to be in play today. All right. So let's explain this. So if you look at, let's go to a yearly chart. So a 1 year chart on AVGO, actually it doesn't work. We'll do a 180-day chart. So look at the 180-day 4-hour chart on AVGO, and you will see that it had a massive drop here. Okay, so this is kind of accommodated with two things. So there's two things here as to why it's dropping. So for one, it was in a head and shoulders pattern, or close to, very close. So here's the head and shoulders pattern right here. So for one, it was in a head and shoulders pattern. Two, if you look at the news, you'll come down here, they did have a deal to buy CA Technologies, and for some investors and some analysts and Market Watch, they feel that it doesn't make a lot of sense for Broadcom to be buying out CA Technologies. And then secondly, they're having to spend $19 billion to acquire CA Technologies. So there's a lot of news there revolving around AVGO, and the fact that it was in a head and shoulders pattern kind of accommodates this massive drop here today. So what we're going to do is we're going to look for continuation down on AVGO to short. If you're on TD Ameritrade, they do have shares to short, easy to borrow. So we're going to watch AVGO short today. Now, it's kind of challenging because here's the thing. AVGO is at a new 52-week low. This, it had support, around this 220s area, kind of right in this 220s, 225 area. It had a bunch of support, but we recently just broke through that right now. So we can't really go based off of 1 year price point. We might have to look at a 3-year chart. So let's see, we're down to what, 218. So the next kind of area that we could see a bounce on AVGO would be around $209 or $210. Okay, that'd be the most reasonable area for AVGO to bounce. So today we're just going to watch AVGO short for continuation down today. It keeps putting in new lows, so that's kind of what we're watching for right now. If in fact AVGO does spike up out of the gates, we could look to get short off of any one of these kind of previous levels that it made pre-market, where it popped down, then it went back up. So for me personally, I think AVGO is going to be a short today. So we're going to be watching AVGO short. Okay. All Again, it's kind of hard to judge an entry because it has such a nice steady downtrend. There's no really big spikes or huge massive drops on any given candle. So this is one where you might have to just get short out of the gates, but ideally I would like to see AVGO pop up first to any one of these red lines and then start coming down. Okay, so if it pops up to any one of these lines and starts to see resistance and starts to want to roll over, that's where I'd look to get short. But again, it might be one where it just dumps right out of the gates. So we'll see, but keep AVGO on watch. Should be a good trader today. All right. Also, watch it for a short squeeze as well. All right. Next on the list, we'll do ZGNX. All right. So ZGNX is, a stock that had, again, as I stated earlier, it has positive phase 3 results for its epilepsy drug. So that's pretty big news. Anytime a company receives positive phase 3, results in their trials and treatments and stuff like that, usually performs pretty well in the day. It brings a lot of attention to the stock. And as you can see, it's gapped from 46 all the way up to $57 this morning. So pretty big gap up, drawing a lot of attention. We're going to be watching ZGNX long. And if you look here, you're looking at this chart on the yearly time frame. ZGNX is now into a 52-week high. So there is no previous price action resistance above it that you can map off. So now you have to go based off of each whole dollar and 50-cent mark. So every whole dollar, which the next one is at 58. Okay, that's actually off a little bit, but you have to go based off of each whole dollar mark or 50-cent mark on ZGNX. So for right now, there really isn't an entry because we're just going up. So until ZGNX puts in a high, pulls back, and starts consolidating, we won't really have a great entry. There it goes, over 58. So we're up to 58.90. And as you can see, this thing is starting to really pick up. So going to be watching ZGNX long today. All right. So just keep it on watch and map out once it hits a pre-market high, once it pops up and has a pre-market high like it does now. Now the pre-market high is 58.90. Now you can start mapping off the entry for a long over 58.90. All right. Let's see. All right, there we go. So there is kind of ZGNX. Watch ZGNX long. Great positive news this morning. Still trending up, still moving up. Just wait to mark off the pre-market high. Look to get long over that. All right, guys, so ZGNX is just very simple. Wait till it puts in a pre-market high. Once we get a pre-market high, we can map off that level and look to maybe get long over that area. So ZGNX on heavy watch here this morning. All right, next one on the list is we'll do Tesla for now. So Tesla gapped up this morning. So I'm just watching Tesla because, it can make significant moves throughout the day and you can make, good money on small share size. So as you can see here, if we go back a little bit, we'll do like a 20-day chart. You can see that I had this level mapped off here. And yesterday, Tesla bounced on that level. And then into pre-market trading, we're trending up. So we're still kind of trending up on Tesla. And, the market gapped up this morning. If we can see the market push a little higher, we might get, a long bias trade here on Tesla. So still watching Tesla long biased for right now until we break down the 315. If Tesla breaks 315, then I'd be short biased. But for right now, we're kind of in the middle. The only issue with Tesla is we're in the middle range from 315 to 330. We're almost right in the middle of that range. So it's kind of challenging to take a long out of the gates on Tesla, considering it could drop down, retest yesterday's closing price. So all in all, Tesla is probably not the greatest play of the day, but I would say keep it on watch because there is a strong chance it might start moving today. So again, Tesla's just more or less one to keep on your watch list for right now. For me, I want to be long on Tesla. Oh, I do hate Tesla. I absolutely hate Tesla as a company. As a stock to trade it works just fine. But I don't like Tesla. Let's see, what else do we have here? So Tesla's one, BIOC. I'm going to talk about BIOC in regards to new investors so that you guys don't get caught up in this bullshit. So for one, let me explain what happened. Wait, hold on. Let me get my thoughts together here. Okay, so BIOC was a recent stock that went through a reverse split, as you can see here. It went through a 1 to 30 reverse split. The price was like, I don't know, 15 cents, 14 cents. They go through reverse split, puts their share price up to $4. Everybody here gets short and they start shorting the stock in hopes it just keeps falling down. And the next day, instead of it dropping, it squeezes up. People reshort it. It sideways consolidates. Shorts cover, cause a massive short squeeze up. This morning, after hours trading, hits 869, pulls back. This morning, pre-market, it double tops at 869 or close to it, starts fading out. What I would be doing is I'd be looking at getting short biased on BIOC. It's possible it could go through another short squeeze and run up again. The likelihood of it is not as strong as it's starting to fade out. Again, it was 14 cents. So think about anybody who is trading the stock or owned it at 14 cents. Imagine owning, a couple thousand shares at 14 cents. It pops up to 869. Even 1,000 shares puts you at $8,000 this morning. If you had 10,000 shares at 14 cents, was that 10,000 shares for it? Was that cost you $1,400? I think, if I'm correct, right? At 10,000 shares, 14 cents, cost you $1,400. You wake up this morning, 10,000 shares, you're up $60,000 a share, right? So to think that BIOC isn't going to sell off, that'd be pretty naive. I think there's a strong chance you're going to see BIOC go right down this morning. Okay. So keep your eyes on BIOC short. If you're long bias on it, maybe look to start selling and locking in the profit on it. All right. Next one on the list is CA. So we'll talk about CA. Oh, yeah, I apologize. Yeah, I did not calculate the split there. So that was completely incorrect. If I calculate a split, that's completely incorrect. But you're right. You're right. But either way, there's a lot of people that made a lot of money on BIOC, and the likelihood of them getting ready to sell, it's probably going to be pretty high. Yes, the split. I totally forgot about the split. So, for one, the next one on the list is CA. So here we go. CA is CA Technologies. This is the company that AVGO is buying out. And as you can see, the stock has gapped up and gone through a sideways consolidation. So this is a little interesting to me because AVGO is going down while CA is going up. And that's fine because AVGO has to spend a bunch of money in order to acquire CA. So there's a lot of investors that may be moving a little money out of AVGO and putting it into CA. But at the end of the day, I think CA could be along over this $44 and kind of 30-cent area, okay? So just to mention, watch CA today. It's a huge gap up. It is in relation to AVGO, and we could very easily see this pop over $44 and start running to the upside. We are into a new 52-week high, so there is no previous price action resistance that you could map off based to pricing, but you can map off each 50-cent and whole dollar mark as your resistance points on CA. Alrighty, so those are all the stocks on the watch list here for me today. I'll take a look here at Netflix. So let's see, downgraded to neutral versus a buy. Okay, so Netflix downgraded. All right, so let's see, we pop back up to this 420 area, pulling back again. Yeah, I'd probably be short bias on Netflix today as it popped back up to the 420 area and failed once again. Yeah, so I would say be short bias on Netflix here. All right, guys. So watch Netflix today. Again, as you can see, yearly chart here. Again, I've been playing on the idea that we're going to double top here a little bit at 420, and maybe the news of getting downgraded a little bit is going to help that push it a little bit lower. So again, I would be short bias on Netflix today. You can see from after hours trading to pre-market trading, it's been holding this trend from 412 and up and bouncing off this trend line. So today, if in fact it can break down this upward support trend line that it's built from aftermarket trading to pre-market trading, then that's where I'd probably look to be entering short, is below that trend line there. Okay. So that's Netflix. Again, Netflix, I'm still a little bit short bias on that stock for right now. What was another one? HUYA. We'll talk about Cron. I do want to talk about Cron. We'll get an update going here. So let's see. So Cron is still losing volume, which is not what we want to see. Oh, I did not want to do that either. Let me go back. Okay, so right now Cron is knocking on the door of this downward trend line resistance and yet cannot successfully break over it. So again, as soon as Cron can get over this trend line and hold above it, that's where I might look to enter long for some type of swing trade on Cron. But for as not right now, it is losing volume, which isn't a good sign. It is losing volume. If we can get a breakout over this trend line and start moving up, the volume will definitely increase. But as for right now, Cron is still neutral. ATVI, Activision. Activision had a good day yesterday. Activision is also at the 52-week high. So do be careful because Activision is currently at its 52-week high, which could result in a pullback. Okay, so I'm not going to watch ATVI. I would expect that today you're going to see a little bit of a pullback on ATVI first before maybe it continues upwards. Go take a look back at what was the ZGNX. All right, so ZGNX pulled all the way, well, it popped up to $60.45, and now it's having a pretty big pullback all the way down to 58. So this is kind of what we're looking to see. All right, we're going to watch ZGNX. It now has the pre-market high. We've now pulled back. We're probably going to bounce soon. Once we bounce, we might start performing into a pattern, which can then give us a clear entry. That's the idea. Is Netflix already going down? Let's see. And there it goes. As you can see, the break below that trend line snap. Now what we're probably going to see is something like this, where now that we've broken down, we'll squeeze back up, test the trend line maybe, and then roll back over and down. I'll take a look at MU real fast. MU. So MU's kind of at a pivotal moment. It's got a lot of resistance on it right now at this price point of $55, or yeah, right about $55. You can see this trend line here is coming there. This resistance line is meeting it. So it's hard to judge for 100% sure, but you know, if I had to make an educated decision, I would probably say MU is going to push a little lower today. It might not, but just based on the chart, I think MU is going to go for another push to the downside. The yearly chart shows it popped up, put in a lower high. So we do have the lower high rolling over. Yeah, I would expect MU is probably going to have a little bit of a red day on its hands. Okay, so all right, guys, that's all I have for you today on the watch list. I hope that helps. There's a lot of good stocks out today. It looks like there's going to be some good plays today. I do think that there's a good chance we're going to have some strong movement in the market today, so that's always a plus. Other than that, that is all I have for you. Now, I will mention this. This is something I was thinking about. For some of you guys that are newer to trading, all right. So if you're newer to trading, all right, so if you got to run, you got to run. But I would recommend hanging on for probably the next 5 minutes or so I can explain this in a way that might make some sense to you guys, right? So stock trading, it's all about, for the most part, it's all about making money, right? It's all about making money. So if you're newer to trading and you're just getting involved, okay. If you're newer to trading, you're just getting involved. The idea of stock trading is, of course, to make money. Nobody wants to lose money. Now that that's out of the way, nobody wants to lose money. It's all about making money. But as a newer trader, if you have a smaller account, if you're a newer trader and you're just getting into it, if you're someone who's maybe been trading for a little bit, not finding much success, I do not trade gaps only. So again, if you're any of those things, newer, just got started, smaller account, you cannot be under the impression that you're going to be able to come into the market and make a bunch of money. It's just likely not going to happen until you have a few years of experience under your belt. You might make a few good wins here and there, but don't expect it every day. All right. And for one, it's about the freedom and having some passive income and things like that. So what I would say to you, all right, is if you guys really, yeah, we're talking about some newer traders now. If you guys really are trying to become a trader and it's something you really want to do as a career, 100% go for it and don't give up. Secondly, is if you're a newer trader, the idea of you making a bunch of money, it's probably not going to happen. So just understand that it's most likely not going to happen. But what I would like to present to you is a different way of thinking. See, when people come into the market and they start trading, the idea is they're coming to make money, hopefully make money. Okay, but how often, do you guys think about your monthly expenses? Okay, this is what I want you to think. I don't have to do it. It's just, and it's not something I did when I began trading, but it was the other day I thought about this and I said, you know what? This is probably the more appropriate approach or a better approach for a newer trader for their mindset or the way they should think is, for example, let's say I just started trading and I'm looking to make a little bit of money. I want to learn how to trade. The idea is not to lose, but in reality, what I should be doing as a newer trader is, for one, don't think you're going to get rich quick. Not going to happen. But don't think you're going to make an absolute killing. What you should do, or think about trying as a newer trader just getting involved, is look at your monthly expenses or even weekly expenses, right? Let's say you spend $25 a week on gas, and then you have some groceries that may add up to, $300 a month. I don't know, right? So let's just say your monthly expense is $1,000, right? So if you, on general, each month spend $1,000 on, services, goods, and that's your expense, right? $1,000 a month. You have to understand that you can lose money in the market. So to come to the market and lose money for one you don't have is not good. But instead of trying to make $500 on a position or $300 on this position, break it down, right? And say, my monthly expense is $1,000. Or if maybe if you live with your parents, your monthly expense is $500. Try and come into the market and just make a little bit of money to wash out your monthly expense. Okay. Trading doesn't have to be a means of you making a lot of money. Trading can be a means of you cutting back and helping provide for some of your monthly expenses to make life a little bit easier. Okay. Because it's much easier to make a little bit of money than it is to make a lot of money in the market. So if you focus on making just smaller wins, don't get greedy and don't try and aim for the fences, right? Keep it small, make 15, 20 bucks, 30 bucks here and there. Next thing you know, your monthly expense is going to go down a little bit because you're bringing in this small little extra income from trading. And then that should help essentially make your life a little bit more comfortable, maybe a little bit easier. Okay. So instead of trying to make money, in a sense of instead of trying to create a massive income, try and use it to cut down your daily or monthly expenses. Okay, that's kind of one of, and I don't really think about it that way. I mean, I kind of do, but for me personally, that's kind of my thing, right? Is in the beginning of the month, my idea is to make the amount of money that it costs me to live each month, my business expenses, right? Make the amount of money that I know I'm going to have to spend, okay? And then anything after that is just pocket change, right? So play it accordingly to the point where you can make back your monthly expenses. And then at that point, it's house money, right? Do what you want, play it safe, and make the money. But I think essentially as a newer trader, it's just wiser to think of your approach to trading as a way to create some side money to supplement your monthly expenses. And then once you can do it long enough and become consistent, at that point, you can start to make it a part of your career and maybe your income as well. Okay. And I will say this, if you have smaller accounts, I'm going to kind of read through some of the questions here. Okay. Hold on one second. There's a lot of questions coming in. Hold on. Let me read through. Newer traders, paper trading. I'm new to trader, hate the PDT. The PDT is a blessing in disguise for new traders. You're going to go broke, at least 80 to 90% of you. No, 80 to 90% of people won't go broke because 80 to 90% of America is already broke. So only 5% of traders make money in the market. I would say that's false. I appreciate the free content. Newer trader and have been just breaking even. Okay, thanks. Yeah, I'm doing quite well. Good. You know, I use sales. Okay. Okay. So a lot of questions coming in here. Exactly. So here's the thing, guys. I will touch real quick. Maybe one of these days I'll come on and just kind of do like a Q&A. Lastly, before I go, I will mention is that trading is about being able to live and trade the next day. Your goal is not to make money initially. Your goal is to survive. The market is like a big fish tank with a bunch of sharks and whales, and you are just a little goldfish trying to find your peace and quiet within inside that feeding frenzy, okay? Everybody has a different approach, okay? Everybody is in the market for different means and a different approach. Long-term investors, swing traders, scalpers, momentum traders, etc. Your job is to find where you fit in the mix of all of that, okay? That's your job. And the best way you can do that is by practicing, taking it slow, taking it easy. Don't rush to make $1 million because it's probably not going to happen. It's how you lose $1 million, okay? So one of these days I'll come on, do like a little Q&A thing. And I will fix my trading view link. Absolutely. All right. And update my whiteboard. I only use that occasionally, you know. So anywho, I got to get running. I love doing these talks like this rather than just looking at charts and saying support, resistance, and all this, because it's a little bit more fun and it's more engaging, you know, guys. So one of these days I'll just kind of hop on and we'll do a live stream. We can go over a bunch of different questions and things like that. Again, always make sure to take a look at the description box below because that will have all the links for our private groups, chat rooms, Facebook groups, and things like that you can join into. And then I will get the TradingView link fixed. I don't know why that's wrong. Anywho, that's all I have for you guys today. Stay tuned for tomorrow's watch list.